What exactly happens to the 10-year, Treasury yield from now? So how much of a reflationary trade will continue with a Democratic Senate and Joe Biden at the White House?
Well, I mean, I think there's an important element to the difference in where we sit today than where we sat, before Epiphany, before January 6th, before the runoff, was that now, the pathway for more fiscal spending is clearer. Right now, how much we get, we'll see. And obviously, there is this idea that we do have very, very narrow margins. Obviously, the narrowest you can in the Senate and narrow in the Congress as well, to see what kind of fiscal push can get made. But I do think that yields and the yield curve are reacting to that. But again, as I said before, I think the Fed really is key on keeping financial conditions easy. And so we don't expect a very big move higher in yields here, as monetary policy is going to stay on hold. One of our key themes and a big important view around our positive view on risk assets is this idea of new nominal, right, Francine, which is where rates stay relatively stable. And although inflation increases, it doesn't solicit a policy response from the Fed. And that's positive for risk assets, and obviously for treasuries means very range bound.
So, Scott, what would actually, warrant a policy response?
Well, I mean, I think obviously to the extent that that we got, very positive rebound in economic activity, or if the vaccination or the virus impact would be significantly less than expected. But I mean, I think we're far from there, right? In particular, the employment situation with the new Fed framework, we're not at the point where we should be talking about withdrawing both fiscal or monetary policy.